Good afternoon and welcome to your weekly FX Options report. Today is Wednesday, April 14th, 2010. In midweek trade, the U.S. stock averages are trading in positive territory, higher by 0.5%. Now, U.S. economic data releases as well as better than expected earnings have been in focus. U.S. retail sales for the month of March extended their gains for the third straight month, rising by 1.6% to $363.2 billion. And the prior month's figure for retail sales was also upwardly revised, showing an increase of 0.5%. Excluding autos, retail sales were up by 0.6% to $300.5 billion. And March CPI in the U.S. came in higher on a seasonally adjusted basis, rising by 0.1% due to the increase in prices for fruit and vegetables. Core CPI figures, which exclude food and energy, remained unchanged. And in terms of overseas economic data releases, Eurozone industrial output for February gained by 0.9% month over month and rose by 4.1% year over year. Meanwhile, European fiscal concerns do remain on the sideline, and Moody's ratings said today that there's still a risk of a further Greek credit ratings downgrade, even with the EU IMF assistance. Now, the EU also said that Portugal may need additional budget measures this year to meet its deficit target for 2010. Now, taking a closer look at the spot FX market, the U.S. dollar is trading lower against the majors of the euro, pound, as well as the Japanese yen. Now, the dollar has pared some of its losses following Fed Chairman Ben Bernanke's testimony before the Joint Economic Committee, where he said that interest rates will remain low for an extended period. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at ICE's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, which is our daily trend alert, let's take a look at the AUX, which is the U.S. currency, against the Australian dollar. For that pair, the downside does prevail and the RSI is badly directed. Now, the preference of trading central analysts is short positions below the pivot of 115, with targets standing at 106 and 102 in extension. For the BPX, which is the U.S. currency against the British pound, caution is advised. Now, the pair is pulling back on its support and the RSI is mixed and calls for caution. The preference of trading central analysts for the BPX is long positions above the pivot of 64, with targets standing at 68 and 70 in extension. For the CDD, which is the U.S. dollar against the Canadian dollar, the downside does prevail. The RSI is bearish for that pair and calls for a further decline. The preference of trading central analysts for the CDD is short positions below the pivot of 103.50, with targets standing at 98.25 and 97.50 in an extension. The RSI is bearish and does call for a further decline. And for the EUI, the upside does prevail for the U.S. dollar against the euro. Now, the pair is pulling back on its bullish channel, lower boundary ahead of a rebound. And the preference of trading central analysts is long positions above 72.50, with targets standing at 75.30 and 77.50 in extension. And for the SFC, which is the U.S. currency against the Swiss franc, a rebound is expected. The RSI is supported by a rising trend line, and the pair should rebound on its new support. The preference of trading central analysts for the SFC's long positions above 105, with targets at 108.75 and 110.25 in extension. Last but not least, for the YUK, which is the U.S. currency against the Japanese yen, the upside does prevail. Now, the pair is pulling back on its new support ahead of a rebound, and the preference of trading central analysts is long positions above 90, with targets standing at 96.96 as well as 97.90 in extension. Now, let's move on to your weekly trend opinion. Last week, the U.S. dollar suffered some weakness against the exotic pairs, and trading central analysts do remain cautious in the coming sessions. In terms of portfolio performance, it is up by 1,383.98% since its inception of August 2007. And since the beginning of this year, January 2010, it is up by 103.89%. Now, we do have two trade alerts for you here right now, which is for the CDD as well as the GBP. Let's start out by looking at the CDD, and trading central analysts are considering puts on the U.S. currency against the CAD. Now, the pair has broken below its supports and should face further weakness because the RSI is capped by a declining trend line. And for the GBP, the U.S. currency the British pound against the U.S. currency, they are considering calls on this pair. The RSI has broken above the bearish channel upper boundary and does call for further advance. Now looking ahead to next week, we will be taking a close look at 4 pairs, which include the YUK-AUX, PZO, as well as the NZD. We will be looking at the YUK because the pair does stand within a bullish channel. And Trading Central analysts will be looking at the AUX because it is under pressure and challenging its support. The RSI is also badly directed for the U.S. currency against the Australian dollar. For the PZO, it has broken below the bearish channel lower boundary and should face further weakness. And last but not least, for the NZD, it is under pressure and breaking below its bullish channel lower boundary. And that does wrap it up for a weekly FX Options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.